All right, good morning or good afternoon, depending on where you are. My name is Jim McDonald with Torrey Hills Capital. Pleased to be hosting today's call featuring CoTec Holdings, a technology and resource extraction company fundamentally changing the method by which minerals are extracted, processed, and utilized through the application of disruptive technologies. Company trades in the US on the OTCQB under the ticker symbol CTHCF and also up in Canada on the TSX Venture Exchange under the ticker symbol CTH. Joining me today from the company, I've got Julian Treger, the president and CEO, Braam Jonker, CFO, and Eugene Herken, VP Finance and Corporate Development. Before turning the call over to Julian, Braam, and Eugene, just want to go over logistics fairly quickly. Nothing new here for people that have been on calls with me in the past, but just a quick reminder. Our webinars are intended to replicate our in-person meetings, which we like and encourage to be as interactive as possible. With that in mind, if you have questions along the way, please feel free to ask them. The best way to do so is use the navigation pane at the bottom of the screen, click on the Q&A or the chat button. One of us will see that, get those questions presented and answered for you. If for some reason we don't get to your question immediately, it's not that we don't see it, it's just that we know that question is going to be answered in the next one or two slides. So we're going to let the normal course of the presentation answer that for you. Alternatively, if you want to speak with one of the presenters at any point in time during the presentation, you're welcome to do that also. The only way to do that is, again, use the navigation pane, click on the raise hand button. We'll be able to unmute your microphone and allow for direct conversation back and forth. As with all the calls, I will remain on throughout, but remove myself from both video and audio so as not to be a distraction. With that said, let me turn the controls over to Julian, Braam, and Eugene. Enjoy the presentation.
Great. Thank you, Jim. So it's Julian Treger here. I thought I would start with a brief introduction as to why we're super excited about CoTec, why it's an important company, and how it's very significantly undervalued already, and then turn over to Braam Jonker. Thank you all for your time and interest in hearing more about the company. That's much appreciated. So CoTec is a company which started 3 years ago and is seeking to create a very ambitious resource extraction space as to where is the next eBay or Tesla in the sector. There has been a lot of time and money devoted to developing and inventing technologies, but they haven't really been scaled. They haven't fundamentally changed the way in which the sector extracts commodities. And it's one of the few areas which haven't been disrupted by technology. And CoTec is a decade-long development story where we're 3 years into it already, where the plan was to initially identify a number of disruptive technologies, and we've looked at several hundred and invested in a handful, mainly in the new process technology space, which we think can create huge leaps in the way in which efficiencies are created in the sector. The second phase, which we're starting now, is to apply those technologies to assets which were previously considered worthless, even liabilities, but with those technologies can be turned into profitable ventures where the technology can change the economics and liberate the metallic content of those. And the big focus for us in that space is waste, recycling, which speaks to the opportunities available in the Western world to apply our technologies. And then the next phase will be after we have these initial projects funded and up and running, which should happen at warp speed for the commodity extraction sector relative to traditional methods of developing mining. The final stage is to take those asset opportunities and roll them out so that at the end of a decade, we will have 20 or 30 projects using our technology, operating mainly in the recycling of waste and tailings, and producing significant amounts of sales and revenues. Just from our first 3 projects, we see a value of roughly 10x our current market cap, and later in the presentation we'll run you through the sum of the parts. Why this is important is because for the West, there is a real need for certain commodities, and the areas that we are focused on are very high quality iron ore and green steel, copper, which is difficult to replace, and rare earths and magnets. And fortunately, we've been lucky in identifying commodities which we believe have staying power. They're less prone to attacks by countries like China, which can flood the market and are flooding the market for nickel, lithium, cobalt, and other commodities which were fashionable quite recently. And so with our focus on North and South America and potentially Australia, we're in very safe jurisdictions. We're very allied with the West, and we're really also very allied with the concept of Fortress America. In fact, a large proportion of our current asset value is derived from our US investments. So in a world with increasing shortages where the grades of traditional metals are declining, we think over the the rest of the century, there's going to be more and more interest in waste. Waste, which was previously considered to be liability, something which you had to pay to sort out, will become seen as an asset. And CoTec is at the forefront of that movement. We will see increasing emphasis by governments on the waste space, and potentially the economic war with China intensifies, reusing the heritage of assets which we have in the West, given that we've been industrialized for a long period of time, is going to become increasingly important. We, of course, also believe very strongly in lower carbon emissions, and reusing waste and tailings naturally provides a much lower carbon footprint, but the technologies we're using also use much less heat, much less water, are much cheaper and much more modular. So we believe we're at the forefront of something, and we have the ambitions to grow the business, multifold into multiple billions of dollars over the coming years. And as a sign of that, the board own, and other insiders own, roughly 70% of the company. We've been financing it, and we're absolute believers in the fact that we can create enormous value for the shareholders, and make a difference in a good way over the coming years. So with that very high overview, I'll hand over to Braam to run through the slides in the presentation. Braam.
Thank you, Julian.
If I can interrupt before you start in, Braam, there was just a question that came in, Julian, and you can choose to address this now or later on in the presentation. But is anyone else doing what you're doing? And if yes, at what level?
I mean, generally, when we've looked through the technologies, we've tried to identify unique opportunities which really move the needle and are very scalable. Obviously, unfortunately, so far, none of those technologies has fallen over. I mean, there are competitors, but we've tried to identify the very best of breed in each category. In general, we've invested in technologies which have had quite a lot of money spent on them, and are now interested in scaling. They're at, beyond the laboratory stage. They need to be scaled. They need to become economic, and where we add value for the technologies is often introducing them to our global network of players in the resource extraction sector and providing both funding and strategic advice. So we generally invest in what's called TR3 or 4 and try and move them further up the scale so that they become viable businesses on their own. And in fact, we've seen significant increases in the value of the technologies we've invested in already. Braam, I don't know if you want to add to that.
No, I think that's fairly comprehensive. Thanks, Julian.
Yep, thanks, Julian. Braam, I'll let you continue on then.
All right, thank you very much, everybody, for attending. So, Eugene, if you could maybe just go to the next slide. So what we're going to do, I'm going to take a brief moment just to walk you through the investments that we've made to date. But the focus will be more on the operating opportunities. You know, the investments that we've made, they are sort of a segue into the operations for us. So even though we have these investments, like Julian has pointed out, it's not our intention to become an investment holding company. We want to be an operating entity. Our target is to become a substantial player in the resources space. So what we do with our investments in the technology is we get with that the right to go and apply these technologies in operations. And we will typically end up with at least 50% of those operations. But as I talk you through the two operational opportunities that we are currently targeting, you will see that in the one we have 60%, in the other one we actually have 100% interest at this point in time. So that is the CoTec model. So even though the investments are very valuable in their own right, and like Julian has pointed out, some of them have already increased significantly. The one has increased probably tenfold already. We believe that the uplift is going to come from the operational application of these technologies. So the first one that I want to discuss is our Hypermag USA project. And I'm going to dive into a little bit deeper detail on this, but this is it's recycling of permanent magnets, and our focus there is in the US, where we own 50% at an operational level, and we also own a further 10% indirectly. So we own 60% of the economic value of that particular project. We have already completed the bankable feasibility study on that, and we're now into the detailed engineering phase for that project. But I'm going to elaborate quite a bit more on that one. The second one is our Lac-Genine project. The Lac-Genine project we own 100% of. This is a reclamation project that we've got out in Quebec. We've already completed the pre-feasibility study on that. And the next phase there for us is the infill drilling and the feasibility work. The technologies that goes with these two, one for Hypermag USA is our investment. We've got a 20% investment in the holding entity of the technology. That's a company called Magneto Limited. And then with the Lac-Genine project, we originally and we continued to test one of our technology investments, which is called Binding Solutions. Binding Solutions is the global leader in cold agglomeration technology, especially on the iron ore front, but also some other metals that are there, where they essentially avoiding about 95% of the carbon footprint of your ordinary processing technology. Eugene, the next slide there, please. We also have an investment, very exciting investment in copper leaching technology called Sabre, where we own 3%. The Sabre investment, that was actually the last investment that we've made, and the competitor there, the closest competitor there, the last fundraise that was done for that competitor was done at a valuation of roughly $2.5 billion. Our investment in Sabo was done at less than $100 million valuation. And Sabo has also recently announced a collaboration with Glencore on one of Glencore's projects. So that's making significant progress, and we're very, very excited about our Sabo investment. And then the last investment, which is also a project in its own right, Mag Iron. If you have a look at our financial statements, the Mag Iron investment is the most valuable investment on our balance sheet at this point in time. Mag Iron, we were one of the first investors in there. We own roughly about 16% of it, and it's a iron ore concentrator in the United States. It's got a replacement value of roughly $500 million, and we managed to acquire it for $5 million. But more importantly, it's also got more than 20 years of feedstock that's available. We've also recently announced that we've acquired the land of the underlying a concentrator, also not a concentrator, a pelletizer, also in the United States. So this project is unfolding fairly rapidly, and we believe that the ultimate value of this project will be several $billion. So very exciting investment for us, Mag Iron as well. So it's also in the green steel because the feedstock has already been mined. So that sort of underscores the CoTec technology, the whole CoTec approach of focusing on reclamation, recycling, and low marginal operations where we can actually go in and unlock the value. Eugene, the next slide, please. Okay, so when we look at the two operational opportunities that we're currently sort of rolling out, the one Hypermag USA and the other one Lac Chenin, these two operational opportunities is our two lowest hanging fruit, and it sort of perfectly demonstrates the way that CoTec is going to grow and deliver shareholder value. The first one that I want to focus on, Hypermag USA. Hypermag USA is a technology where there was more than $100 million spent on, and it's what we call a short loop recycling technology. And what it does is it recycles and recovers the rare earth materials from permanent magnets. And what really distinguishes this from any other technology that is out there is the time that it takes in order to reclaim or recover the rare earths. I always explain it to people, and there is a great video on our website that you can go and have a look at. But what the technology essentially does is it uses hydrogen reactors, which looks, for lack of a better term, a large washing machine that you put your product into. And I always use the example of a mobile phone, even though the mobile phones is not our main focus, where you take the product where the magnet is embedded in, and you put it within the reactor, and as long as the hydrogen can reach the magnet, what it will do is it will dissolve the powder, it will demagnetize the powder, and after about 6 to 8 hours, what you will have is you will have the powder coming out on the one side, and you will have the scrap from where the powder has been recovered coming out on the other side. So we have done our feasibility study on this. Even at the current depressed prices, we are looking at a net present value of well in excess of $250 million. The exciting thing about this technology for us and this opportunity is it's the right technology at the right place at the right time. But the rare earths, we believe, is one of the critical elements for the United States, for the Western world. More than 95% of the rare earth industry is controlled by China, and it is critical for us in AI, robotics, on the defense side. It truly doesn't get more critical than rare earths for us in the Western world. So the reception that we've had in the United States in our interactions with the US government has been very, very positive. The project is also being rolled out in Germany as well as in the UK by the owner of the technology. And there it's received government support from both the United Kingdom as well as the German governments. So it's not just a project that we believe is critical for the West as we move forward. It's also a project that's already received that recognition from the UK and the German governments. And we hope to get a similar sort of reception from the United States. We have already applied for financial support for this project, and we will keep the market posted on that. What is also very interesting about this technology is that it's very easily scalable within the US. So our initial plant in our feasibility study is targeted for the Dallas-Fort Worth area, where we will have a hub that will not just receive the scrap material, but it will take it through the recovery step, and then also ultimately into the production of magnets. So it's literally an end-to-end process. It's not just the recovery of the magnets; it's also the production facility of the magnets, where you will essentially have a process where we can have, and coming back to my example of the mobile phones coming in and permanent magnets coming out at the back, fully recovered. So it's a very exciting project. We're also going to have 2 collection depots, one in South Carolina, and the other one is targeted for Nevada. But the hub that we have down in Texas that can easily be duplicated. So we can. So the target here is to have 3 to 4 of these, and in a 5-year period, we are hoping to be able to meet at least 10% of the US's need for permanent magnets through this reclamation technology. So that's an extremely exciting project. And like I said, we earn effectively 60% of the project there. I'm not sure, Julian, do you want to add anything on Hypermag USA? Julian, you're on mute.
I am mute.
Okay. Let me just continue, Jim. I'm not sure. Are there any questions that has come through?
Yes, I was going to say,
Hypermag?
before you continue on, there are. So it says revenue expected in 2026, 2027. What needs to happen between now and then?
Yes.
And then also,
Okay.
part 2 of that is, where do you get your feed supply?
Okay, so thank you very much. Those are very interesting questions. So the first one is we're expecting our revenue to be in Q1 of 2027. Between now and then, and the next step there for us is the detailed design and engineering, where we hope it will reduce our capex. With the current capex estimates, $125 million. So we're hoping to reduce that through the detailed design and engineering. Then we go into our permitting phase that we'll also do in parallel with the detailed design and engineering. And then we're going into the construction phase. Construction is fairly short. So we should be able, if everything lines up the way that we intended to, we should be able to start switching the plant on sort of around about the 4th quarter and have it sort of properly up and running and producing by Q1 of 2027. When it comes to the feedstock, we have had numerous discussions, and we continue to have discussions with all the major players in the industry. We have discussions with Apple, we have discussions with Amazon. There is the large data centers. There are the smaller scrap suppliers, which we think can also move the needle. We are in advanced discussions with a supplier that could supply up to 10% of the needs of this plant. So those discussions are underway. On the tech, we've also made significant progress in discussions with potential off-takers. Now, you can imagine with where the United States and the Western world is at this point in time, the off-take is the easy part, right? The more sort of challenging part, which we don't see as a significant challenge at this point in time, given the reception that we've received from industry players, is to get sort of a consistent feedstock, not just in terms of volume, but also in terms of quality of the magnets that's being delivered to us.
Braam, I would just add that down the line, this is obviously a business we could separately IPO, and we think there'll be a lot of interest in it, particularly during the Trump administration. So that's another project that we are going to be developing and looking at in the next year or two.
Yep. And then just a sort of a last comment on the value, just to demonstrate and explain the CoTec model, because this one does it so greatly, and so does the Lakshadweep project. Is I have mentioned that at the current very depressed prices for rare earths, we came up with a valuation of $260 million. If we look at the long-term sustainable price that's been estimated by Adamas, which is the Adamas Intelligence, which is the leader in the rare earth space on pricing research and market research, if we apply that pricing model, we get to a valuation of in excess of $500 million, and that excludes any support that we could get from the U.S. government. So if you then sort of apply the value metrics to those valuations, even if I take the most depressed price of the $260 million, where CoTec owns 60%, that's $150 million US, which is almost 250 million Canadian dollars at this point in time, compared to our 70 million shares, which is outstanding. So you're talking roughly $3 to $3.50 valuation just on this one project that we have, compared to our stock price of 60 cents. And of course, this does not include the further upside that we can get from establishing 2 to 3 further hubs in the United States. The total market demand in the United States is estimated to grow through to about 30,000 tons per year by the year 2030. And our plants, this specific hub that we're building now, this will do about 1,000 tons per year. We could further expand it in Texas, and like I said, we can also go and build further plants on the East Coast, on the West Coast, depending on where the demand is in the Rust Belt, just depending on where we see the best market opportunity for us. So that's Hypermag USA, and again, I hope the audience will be able, from this discussion, to see exactly how the CoTec model works. Invest in technology, and together with the investment, get the rights to go and apply the technology and create a significant uplift in the value for the CoTec shareholders. And again, what this does for us is, there's 3 aspects for us in the CoTec model. One is we significantly shorten the period from identification through to production. For a traditional mining operation, it will take, and we've got a slide on that, and I'll walk you through that, but it can take about 15 years to get through to revenue production. What we're doing here is going to take 3 to 4 years in total. So you significantly truncate the time that it takes to get through to production. You significantly lower your capex. Here we have a capex forecast of only $125 million, but you have a significant barrier to entry through the technology that we have invested in. So that we think is the key to significant value creation and growth for the business as we move forward. The second project that I want to discuss in detail is the Lac-Chenin model, is the Lac-Chenin project. We currently have the rights to acquire 100% of that. We have completed the pre-feasibility study on that earlier this year. Again, showed a significant value. We've got $65 million capex, and we got to a $60 million NPV, and that's only on the back of half of the reclamation property that's there. So we have recently announced that we're going to do the infill drilling there, and also going to expand the drilling to cover 100% of the project and not just half of it. So, but that will not require any additional capex. So what you're essentially doing is you are doubling the life of this project to take it from 10 to 20 years. And, you know, all people on this call being financially savvy will understand what that's going to do to the NPV. You know, we expect that conservatively to at least get us to around the $100 million mark. Again, this is US dollars compared to our 71 million shares that's out there trading at 60 cents a share. So again, what you have is a project where you have very low capital and you have speed to market. This project we expect also to be revenue generating in H1 of 2027. And we are also looking to or testing to apply the BSL technology, which could potentially add significant further uplift in that valuation. And we also in advanced discussions with a separation technology that we estimate could add a further 30%. So the project, just as it stands on its own, we think is going to have a valuation of around $100 million, $60 million of that already proven up through the pre-feasibility study. So the next steps there for us is to complete the feasibility study and the infill drilling. That will happen during the first half of next year. And in parallel with that, also testing our two technologies to further enhance the value that's there. And then the final step is to get all the permitting in place and to take this project into production. We are already in discussions with the government of Quebec, where again we've received we had a very good reception with them. We have started discussions with the other stakeholders. We've got you know, we need access to the rail infrastructure. We are talking and to the communities because that's all part of the CoTec model. Is we want to do things the right way, and we want our projects to be a collaboration, a positive collaboration between all the stakeholders that's there. So that's our Lac-Chenin project. Jim,
and I would add
Julian?
there, Braam, that we're confident that it will be qualified to be a critical minerals project for Canada, producing a very high grade of iron ore, which should attract potential additional government funding. And the government is very interested in using this as an example of how a site can be rehabilitated by industry. And in Canada alone, there are 10,000 abandoned mine sites. So this is a model which we can scale and grow in the years ahead.
Yep. Thank you, Julian. Jim, are there any questions from the audience on Lac-Chenin?
We're currently caught up on questions, so I'll let you continue on.
Okay, very good. So I guess one of the key questions that we get is how are we going to fund these without significant dilution at the CoTec level? And like Julian has pointed out at the outset, we as insiders, we own, I think it's up to about 75%, close to 75% now. So, our interest is not 100% aligned with shareholders. It's 300% aligned with all the outside shareholders. So obviously we want to keep dilution at a minimum at the CoTec level. And we do that through several avenues. One is, of course, that we keep our cost at the CoTec level at a minimum. So our cash burn is roughly about $2 million a year if we exclude the work that we're doing on our investments. So $2 to $2.5 million. So that is very low for any listed company. But then when it comes to the financing of these projects, all of these projects are in subsidiary companies underneath underneath CoTec itself. So most of the funding will take place at the operational level through debt funding. There's offtake agreements, there's royalties that we can look at, streaming agreements that we can look at. And then there's also strategic partnerships that we're looking at. In the case of Hypermag, there's also significant government support that we're looking at. And if there is any shortfall at the end of doing all of that, which we believe will be fairly minimal, at that point in time, we will look at equity just for that top-up portion. But the dilution that we expect at the CoTec level is fairly low, and we're very protective of that position because we own such a significant part of the company ourselves. Okay. Are there any questions on that, Jim?
I don't see any right now, but as they come in, I will chime in on.
Perfect. Okay, so if we just look at our capital structure, we have funded the company to date through essentially family and friends, and King's Chapel has played a major role in that. King's Chapel, which is associated with Julian, has put in way more than $10 million at this point in time. We've also raised money from other high net worth individuals. We also have one institution on our books already. So, but everything that you see here has essentially been done by a small team, engaging the people from the outside, experts from the outside in their fields, and it's also been done through financing rounds that has been all raised through the company and management and the board themselves. That's why you have a very tight shareholding situation. We also only have 71.5 million shares outstanding at this point in time. We only have 8 million warrants. All the warrants that we have issued to date have been a short term, 12 months, because we don't want to create a significant overhang that you very often see when companies are going through a growing phase. So we don't have that. And then the options that we have outstanding, those are limited to 10% of the issued share capital of the company. And that's just our management incentive scheme. So you have 71.5 million shares. And if I go back to the valuations that you would have seen on the Lactionine front and on our 60% interest in the Hypermag, and we're going to go through that a little bit more, but I want to emphasize it several times during our discussion here. You can see the huge disconnect between what the valuation is in our projects and the valuation that we have currently in the market. And that's also the reason why you would have seen recently that insiders have bought almost 400,000 shares in the market, because we are so aware of the huge disconnect between the market and the intrinsic value of this company. Eugene, next slide there for us, please.
If I can
So
interrupt you, Braam, I got a
yes,
couple of questions that popped in, maybe
yes,
on the
sure.
last slide, if you want to go back, Eugene.
Yes,
So one, well, current cash position is right there. So the follow-up to that is when would you need to raise additional funds for overhead purposes? And would you expect management to maintain its ownership?
well, I think two answers, two, yeah. Uh, the two answers to that is, I think one, yes, management will be retaining its ownership, and secondly, we have entered into a drawdown facility, a convertible facility with King's Chapel. So we will raise money when the price is right. I think that's probably the best way to say that, and I'll let Julian elaborate on that a little bit. But we are not going to raise money at the 60 cent level. We believe that we're just giving away value. So we'll probably, at some point, a company like ourselves, we're not cash generating. We need to raise money, but we want to do that. We want to do that at the right time. Julian, do you perhaps want to elaborate a little bit more on those two
Yeah, yeah,
aspects?
with pleasure. I mean, fortunately, we have the resources to continue to fund the business, and we are doing so via convertible loans at the moment. But there's no limit to how long that might be required. And in fact, what's interesting potentially to the audience is that the loans are convertible at 75 cents. And have to be converted once the stock price is above $1. So
Yeah.
for those who are interested in investing, my interests are committed to invest at a 25% premium to the current share price, and
Yeah.
we're very happy to do so because we have such strong conviction in the value of what we've already created and the potential to multiply that many times going forward.
Okay.
No, terrific. Next question, if I can continue. Looking at the chart, what drove the stock higher in 2023?
In 2023, I think that was mostly the market related. There was a little bit of an uptick in interest, and also, we were a news story at the time, and we also had a strong marketing push. But that it was mostly sort of positive sentiment in the market, not just for CoTec itself, but in general. If you go and have a look at, there were quite a few of the smaller startup companies at the time coming out of CoTec. There was a lot of positivity in the market, and that was driving a lot of that. So, but we have seemed to settled around, well, this morning our stock price was 60 cents. And we are also now with Hypermag and with the lag stories. I think we can demonstrate to the market much clearer how we intend to unlock value for our shareholders. So we're hoping to not just get back to those levels in 2023, but also to significantly start exceeding them in order to reflect the true intrinsic value of the company. Yeah.
Yeah, and I would just add another contributor to the decline of the stock over the last 12 months has been some selling from very early investors who had a significant profit, but we have largely dealt with that. We've already tightened up the register, in part due to insiders with strong conviction buying that stock. So even though those early investors may have made doubled or tripled their investment, we think that actually there's still a 10x upside from here. So hopefully the corner has been turned on that front as well.
Excellent. And then last question that's currently on here is, since your drilling process is a bit unique, can you talk about how you go about selecting a drilling contractor?
The drilling contractors. Well, I'm not sure I really follow follow the question, the only drilling that we're doing is at the Lac-Chenin project, and they have sent out invitations to people, to identified parties to express an interest. So there's sort of a normal bidding process that we're going through on the drilling side. But the only drilling that we have done to date was the drilling at the Lac-Chenin project. I'm not sure if that answers the question.
Yeah, so Miles, if you need more clarity on that, if you want to come back and further clarify that your question on that, but we'll continue on from there. All
Yeah,
yours,
sure.
Braam.
Okay, Eugene, the next slide for us. So this is what we keep on discussing and mentioning, and this is the complete disconnect between what we believe the intrinsic value of the company is and the market price. If you look there, the market cap, this was the market cap of a few days ago. I think as of this morning, we should be around about $45 million, so less than $50 million. But if you start looking at just the assets that's on our books alone, the fair value of the investments, those already exceed the market cap of the company. Then also very significantly, the company's got $100 million in tax losses. Obviously, this was a shell company. The company itself has been in existence from 1985, and significant losses has been incurred by the company during previous projects. It was a mining company, and the main loss came from operations in Ukraine that was in the war zone. I'm not going to elaborate on that. But the company essentially has $100 million in tax losses. So the first $100 million of gains that we will make, capital gains, is about $80 million in capital losses, and the rest are revenue losses. But the bottom line is the first $100 million of those gains are sheltered. So that asset alone, and in here we're only attributing a few cents in the dollar to that. But in essence, if we do execute on our plan, that those tax losses alone is worth in excess of $20 million to us. So roughly half of our market cap just in tax losses alone. Then we have the Lac-Chenin project. Again, currently only sitting at around about $60 million US. We believe that's going to, just through the infill drilling program and the expansion drilling program alone, is going to probably go up to about $100 million. And then we still have the additional benefits that could come from the application of the BSL technology, as well as the gravity separation technology that we're in advanced discussions with. And then on top of that, we have Hypermag USA, where again, even at conservative levels, we have roughly $150 million US in there, which today is worth about 250 million Canadian dollars. And then we have all the other projects that's on top of that. With Sabo, for instance, we have the agreement in place that whatever projects we bring to them, again, we'll do that on a 50-50 basis, even though we only have a 3% interest. You have Mag Iron, which I've briefly touched on. The Mag Iron project has got the potential to in itself deliver probably another 10x for us on the existing high valuation that it's already done. It's already done 10x for us. So you've got the Mag Iron project on top of that, and then there is the other opportunities that we are yet to start exploring, and the rollout of these existing technologies that we have. So if this is not compelling enough, then I'm not really sure what is. But Julian, do you want to add anything to what I've mentioned here?
No, I mean, I think, we've just begun, and I think there's going to be more announcements, more news. As I said in the introduction, so far we've identified the technologies and we've got the first 3 projects. But the aim is to have, 20 to 30 projects. So we think that whatever we've got already, which is, 10 times the current market price, we've just begun.
Yep. Very good. Thank you, Eugene. Next slide. So essentially, and I have touched on this slide, but I think this is this is really key to CoTec, is the speed to market. You know, and if you look at where we are on our sliding scale, you know, we've already, for Hypermac, we've already completed our project evaluation. We are now going into the project implementation phase. With Lac Janine, we almost completed. Mag-Iron, we also very well advanced in that project evaluation phase in order to go into project implementation. So we are on the cusp of getting to production. We're 2 years away, which for some people might sound like a long time in the mining industry. That is a very, very short period of time compared to you know, other projects, like I said, that can take up to about 15 years. But it's not, and I want to come back to a point that I've made earlier. It's not just the truncating of the timeline that's important to us. It's also much, much lower capex. You know, these days the mining projects, you know, they're starting to count money in hundreds of millions of dollars, billions of dollars. We have seen over the last few years significant blowout on capital projects and the capital budgets. You know, so we don't just have a much shorter timeline, it's also much lower capex, which significantly reduces the risk for the investors. But we have that high barrier of entry because we are protected through patented technology. And like Julian have said at the outset, we are not interested in very early stage technology. It has to be proven technology. It has to be scalable. So we believe that we have a really, really unique product that we are bringing to the market in the resource space. Any questions on this, Jim?
Nope, nothing right now.
Okay. The next slide, I believe this is just an expansion of what I've discussed at the previous slide. So again, just to emphasize, you know, we've only been at this for a 3-year period. Over the last 3 years, we have identified all of the investments. We've actually one point that we haven't mentioned yet is we have by now looked at over 300 different technologies that are out there. So we're highly selective, you know, given the fact that we've only made 4 investments to date in technology itself. We are highly selective in what we're doing. But what you see here, everything that's been achieved to date has been achieved in the space of 3 years with a very small team of you know, highly qualified and highly experienced people. And we are 2 years away from delivering revenue to our shareholders as well. Eugene, next slide. Our focus is the Western world, currently North America and Europe. We have the Sabo investment that's coming out of Chile, which is of course also very, very friendly jurisdiction. But at this point in time, you know, we are not interested in entering any of what I will call the more exotic destinations that we often find in the mining industry. We're going to stick to North America and Europe. We believe that there is huge opportunities in these 2 areas, and it will give us enough space to grow to where we want to be. We have no need to go outside of our focus area. We're also, by the way, looking at Australia. So all of the sort of want to try and avoid the term, but sort of Western allied countries. That's where our main focus is. Main focus is also on the critical mineral side. So we really want to make a difference for the jurisdictions where we operate in. Julian, do you want to maybe comment a little bit further on this?
No, I mean, we're investing our own money, so we're doing it very prudently. You know, every time we spend $1, it's effectively 75% of our money as a board of directors. And so, you know, we can invest in safe places, and also because of the focus on waste, there is really a lot of waste and old mines in those developed economies. So we don't have to compromise on risk here.
Okay, Eugene, the next slide. So I'm not going to spend too much time on this slide, but we have adopted the sustainable development goals as they apply to us. I mean, obviously they don't all apply to us, but we have adopted the ones that do apply to us. We're a company that really, I think, punches significantly above our weight when it's not just in the growth that we have ahead of us, but also in the way we do things. We do it the right way. Governance is very important to us. So we're a company that's got all the necessary governance and controls implemented to ensure that things are done the way that we expect companies to behave these days. If you also look at the partners that we have in our various investments, we have the likes of BHPs in there. We have Orion as an investor in CoTec itself. We have the likes of Rothschilds. That's an investor in the company. So governance is very much an integral part of the company and the future that we're looking at. Eugene, the next slide for us. Okay. So what's ahead of us? I think I've already touched on this, and the next 2 years essentially is to take our projects to implementation. So there's a lot of work. There's work on the permitting side. We have on the Hypermax side the detailed engineering that needs to be done. There's the fundraising that goes around that. I don't want to say fundraising, rather the funding of the projects. On the Lactionine side, there's the completion of the feasibility study. That's going to be a big one for us. And also the funding of that particular project. There's also identification of opportunities for the SABO investment. There's on the mag iron front, there's a lot of movement that's very positive there. All happening and coming together here over the next 2 years, when we expect to be able to bring significant value delivery to our shareholders. Eugene, the next slide for us. We continue to look at other opportunities, and one of the areas that we are interested in is also the graphite and graphene space. But at this point in time, I would say our focus has shifted. Whereas in the first 2 years, we were 99% focused on identifying new technologies for us to invest in. Our focus has now shifted to maybe 95% operational rollout and 5% to new technologies, because we also have to spend quite a bit of time and effort in identifying other operating opportunities rather than just investing. But we are interested in the graphite and graphene space as well. Julian, do you maybe want to comment on that?
Yeah, I think we're on the execution and implementation phase, but there are big things like graphite, graphene, like useful use carbon, like de-radiating nuclear waste, where we continue to how to recycle red mud. I mean, there are some big problems facing the sector, which we continue to look for solutions for, but it's no longer the main emphasis with what we think are excellent world-class technologies for iron ore, copper, and rare earth recycling. Those are huge markets for us to scale into. So we have enough on our hands, but we continue to be opportunistic.
Okay. All right. And before we go to the conclusion, Eugene, can you go just to our board slide, please?
Yep.
Okay. I do just, in conclusion, want to spend a little bit of time introducing you to our board of directors, which I think is not just the most senior board of directors on the TSX-V, but probably one of the most senior boards of directors in Canada. We have Julian, which is on the call. Julian's got an excellent track record. He's one of the most successful investors and entrepreneurs in the junior and mid-tier space in the mining industry, and has been in that position for many years. Our chairman, Lucio Genovese, he's got a significant track record. He's ex-Glencore. He's been in the space for almost 40 years. We have Tom Albanese, who was the previous chief executive officer of Rio Tinto, which I believe is currently the second largest mining company in the world. Sharon Fay, who was the chief investment officer for AllianceBernstein, one of the largest investment funds in the world. We also have retired Vice Admiral Bob Harwood, who's taking, he's contributed a lot for us, especially in hypermag and relations with the US government. The next slide there, Eugene. We also have Rez Ichelov. He was head of business development for a large trading house, Traxys, for many years. He's joined our board recently, and we also have Margaret Nody. Margaret was in charge of resource investments for Ontario Teachers. So we have an extremely
Canadian pension plan. She was.
Yes, correct. Yep. Yeah. Thanks for that, Julian. So we have an extremely senior board of directors, and I think that again sort of underscores the trust that people have. Not just the trust, but also these are people that share the vision for CoTec. They see the opportunity and they see the potential. And not only did they join our board of directors, they've also invested their own money into the company, which I think should bring a lot of comfort to the shareholders. And also going back to one of the previous slides I just briefly touched on, this is why CoTec is already a large company dressed up as a small company. We have all of the right controls in place. We do things the right way. We've got proper governance in place. We've got an extremely senior board of directors investing their own money into this company. And it's just all coming together. And over the next 2 years, shareholders can really look forward to significant value delivery from the CoTec team. Are there any questions on that?
I don't see any questions right now, and I do notice that we're coming up on our sort of 1 hour time frame.
Yes, very
Although
good.
I think you're pretty close to
yes.
as it is.
Yeah. So that's our presentation in a nutshell. I'll leave it to Julian to make some closing comments. But those are all the details that I wanted to highlight to our audience today.
Well, thank you very much, Braam. It was very comprehensive, and I think you highlighted the great opportunities that we see. And I think you also communicated the excitement that we feel about the potential for the business and the confidence that we have that we are inventing a new future for the commodity extraction space, which is, more economic, but has enormous potential, is important strategically, has much lower carbon footprints, is cheaper, and where we can unlock a lot of value. So we invite those interested in the company to come along with the board and the management for what will be a very interesting and, we believe, highly profitable ride. So thank you so much for your time and attention. And if you have any further questions, you can, of course, reach out to us directly as well. Thank you.
Thanks, everybody.
Julian, Braam, and Eugene, terrific presentation for our guests on today's call. Thank you for joining us. Thank you for the questions. Today's keyword, holiday. And for anybody who didn't see, the Fed cut the rates by 25 basis points just a minute ago. So have a great holiday, everybody. Right. And thanks for a great presentation. We'll keep you up to date on the company's progress going forward.
Thank you very much.
Thanks. Bye-bye.